All right, what up, yo? It is Ingle Trades here, and today's video, I'm going to be teaching y'all about literally the most important thing you could be adding to your trading. It's called Draw on Liquidity, DOL. When I added this to my trading strategy, literally the same month is when I took my first payout and when I started practicing and getting reps on how to determine where draw on liquidity is, how to target it, yada, yada, yada. That is when my trading completely transformed and payouts started coming in every single month so far. Now, let me show you guys right here how the different types of draw on liquidity, and I'm going to show you guys how to find it, how to target it. So, how to find DOL? What are the draws on liquidity that we will be targeting? One, data highs and lows. Basically, if you go to Forex Factory, every day you'll see the red folder news, and these are going to be data candles. So you have a 10 a.m. data candle, you have an 8:30 data candle. That candle will create a high and a low, and every single time that high or low will always get swept. Those are great targets for draws on liquidity. Number two, you have session highs and lows. So that would entail Asia session high and low, London session high and low, previous day New York AM session high and low. Those are fantastic targets, and literally what I look for those every single day. Because you got to think, draw on liquidity is like a big ass magnet. If you have London session high here, prices right here, big ass magnets pulling that shit up towards London session high. So that's what you got to think about that. Another one, high time frame PD array. So it might be there's a 4-hour untapped bullish fair value gap below price. So maybe our draw on liquidity is taking a short to that bullish gap because, hey, maybe we're like, if price is going to continue going higher, I think it's got to come down to this gap and then trade out of it. So our draw on liquidity will be targeting that gap, or it could be like an hour gap, et cetera, et cetera, et cetera. And then finally, another draw on liquidity is just hourly highs and lows. The market will make highs, the market will make lows, and it's kind of like market experience where you determine which ones are good targets and not. But these are the main ones that you guys want to be looking for, and I'm going to show y'all how to use it. So if you want, screenshot that. I'm going to delete it. I might have missed one or two, but I'm not sure. So let me go into here and to replay trading. We're going to replay literally this last Friday, December 12th. That just happened. So let me see. All right, replay here. Okay. And all right, there we go. All right, so coming into Friday, which was December 12th, let's kind of check our draws on liquidity here. Now we're going to mostly be focusing on the NASDAQ. So we came into today. We are in the middle of this range. We have 4-hour lows here. We also have 4-hour highs here. Now, SMT, which I will teach you guys about SMT, it is the most important confluence you can use. But pretty much it's when there is an imbalance between correlating pairs, ES and NQ. Let's say NQ swept the high while ES didn't. That is bearish SMT. That's something you always want to add. I'll make another video about that. But ES swept these 4-hour highs right here while NQ failed to do so. So I'm like, okay, we could be looking for shorts, a short draw on liquidity. So we come down to the hourly time frame. Now look at this. We are in a bearish hourly fair value gap at 9 o'clock in the morning. And if we look on here, let me see. Bearish fair value gap. Now look at this. We have previous day New York AM low and previous day Asia session low that we never swept. So at the same time, we also have London session high that was never swept right here as well. So these are good draws on liquidity. We have two resting below. Another one I forgot. Equal lows, equal highs. Fantastic one. Equal lows and equal highs are great draws on liquidity. So right here, we also have relative equal lows on the NASDAQ. So we have some targets above and below price right here. Now, we come into today. Let's see. Market open is right here. Now, pretty much, so market open right here. and I noticed that we have bearish SMT and we inverse this bullish 15-minute fair value gap right here. Okay, if price inverses a higher time frame PD array while respecting a bear, like say it inverses a bullish 15-minute gap while it's respecting an hourly bearish gap, it's a good indicator that we're probably looking for shorts, especially if there's bearish SMT. But that's not the topic of today's video. So we also have these internal lows right here that we could be targeting right here. All right. So let's kind of come down to the lower time frame. Now I'm thinking, okay, we have this internal low. That right now is my current draw on liquidity. Now, do I have an entry to this low? No, I don't. And boom, it's swept. Draw on liquidity taken. We are not targeting that anymore. Once a draw is taken either on NQ or ES, that draw is now invalidated. You are not looking for trades to it anymore. Let's say NQ takes out London session high and ES doesn't. You are not going to be targeting London session high anymore on either one, even though ES never took it, because that is bearish S&T. And if it was taken on one correlated pair, pretty much you treat it like it was taken on the other. Okay. So boom, market opens, we sweep this low. Now, because we swept this low, I'm like, hey, we might be coming up towards the upside where London session highs are right up here. Let me see. So we wait. Price is coming up, and we're waiting. I'm like, okay, look, we're having a little bit of a bullish move. And we tap into the 15-minute IFVG and we start dropping. Market starts tanking down. Now, knowing that, you could have entered in a trade there, but for me, I wasn't sure completely where price was going to go yet. Now that we have come down, we swept an internal high, and now we are dumping towards these draws. Remember, we have relative equal lows on the 15-minute time frame, New York AM low of the previous day, and Asia. I am now convinced my draw on liquidity is now below price. It is like a big ass magnet, like I was telling y'all, pulling price towards it. So now we know we only want to take shorts. That is why draw on liquidity is so important. It is literally telling us that longs are invalidated here and you should not be taking them. It is telling you where price wants to go. So, okay, boom, we see this. Price is coming down, little bit of a retrace, boom, and boom. Okay, maybe it's coming back up. We're waiting. It's chopping. Boom, right there. Huge displacement candle. Inverses this gap. Right here. This right here, when it inverts these gaps, that is your indicator. Price is failing to come up. It came into the equilibrium of this little range right here. Boom. We are for sure going shorts. Let me check. There's a 1 minute gap, taps into it, displaces down. We are going to be selling right there. So boom, we sell. What is our target? These relative equal lows below. Boom, and bang. There you go. Literally, it was telling you where price wanted to go. Now right here, we never had an entry anywhere right here. Now, I know a lot of people took the trade where it was an inverse right here and they targeted these lows. That one is actually a real good trade. I actually missed that on Friday. But I'm using this as an example. Dumping. There's literally no entry. And then we come up to equilibrium and then boom, big displacement candle down. I'm now 100% confirmed with bearish SMT, respecting bearish PD arrays and inversing bullish PD arrays, where there's no chance we're going to continue going higher. Take the 1 minute fair value gap, displacement down, bang. There's your trade right there. And boom, there you go. Let me go back towards another day. Let's see. I think I traded Tuesday of this week, if I'm not mistaken. because I don't want to show you guys a day I didn't even trade on. Okay. So we're gonna come into Tuesday. Let me see. Okay, so we're coming into to Tuesday, right? Basically, let's go to the higher time frame right here. I'm gonna just do that completely. All right, higher time frame right here. We are respecting a 4-hour bearish fair value gap right here. There's an indicator. All right, we're respecting a 4-hour bearish fair value gap, and on top of that, we have been pretty much moving down all overnight. So we have these lows right here that we're taking. So it looks like we had a bullish move off of that. We also got these lows down here and highs up here. So we're just marking out the different pretty much PD rays, or let me check. And if I'm not mistaken, yes, wait. No, okay, I thought there was bearish SMT on this day on the higher time frame. Never mind. All right, ignore that. Basically, all right, boom. So 4-hour time frame, we're in a big gap. We come down to the 1-hour time frame right here. We just inversed this bullish 1-hour fair value gap. Okay, we just inversed that. We did just take these lows. We also got this low down here, and we got kind of highs up here. So there we go. We just inversed this gap though. Now we're kind of looking here. We got a 1-hour bearish order block we're in right here. We just inversed this gap, come to the 15-minute time frame. Actually, hold on. This is all the way at 10 o'clock. Let me back up to market open here. Okay, whoops. All right, so market open, we did not take out these lows. So, okay, cool. Let me make sure this is correct. Okay, yes, so we inversed that gap. We have not taken out these lows yet. We are now looking for shorts. Now, there's not too much opportunity presented here. We do have really no bearish 15-minute PD raise. I know I took a trade this day. I'm trying to think which one did I take. Session highs and lows. We got London session high, Asia session high, and this is previous day low right here. So, okay, cool. Come down to the 5-minute time frame. Oh, I think that's where it was at right there. I took this trade. Yes, okay. I know exactly what I took. So we had a bearish 5-minute gap right here. We are also in this 1-hour IFVG. And then, okay, so there's this 5-minute gap I saw we respected. We are in a 1-hour IFVG right here. Pretty much, we had previous day low as my target because we were dumping. We were expecting a 4-hour bearish fair value gap. Inverse this 5-minute gap. Okay, bet. Market opens right here. Comes up, sweeps these internal lows inside of this 15-minute gap. And I'm pretty sure on ES, ES swept this high right here. And NQ didn't. But we swept it, and then look how this candle closed. With a 1-minute IFVG. Your boy took that so quick. Draw on liquidity is that previous day low. And wouldn't you know, bang, bang. And look, we take the draw on liquidity and look what price does to the upside. I'm telling you, bro, DOL is king, and that is how you use it. I know the second trade, I kind of took a minute to show, but I hope you guys could use some information in here about DOL. If you want to see anything else, because I do read my comments, I don't have a lot of viewers yet, just comment what you want me to post a video about, and I will definitely do that. But y'all have a good day, okay?